Hello. Continuing on from our video last week where we were talking about the importance of protecting your wealth, and during which I shared with you some 2014 stats regarding actual insurance claims. We'll progress with that again this week. Now, if you're an employee, chances are you do have some level of insurance inside your super fund, but do you know how much you actually have or how this compares with the amount you actually need? We spend a lot of time talking about the creation of wealth, but the protection of that wealth is equally essential. We all work so hard to achieve financial security, and if or when the proverbial wheels fall off, you don't want your plans to be derailed. Take a moment, if you will, to consider the repercussions of your illness, injury, or even premature death. Could you afford the necessary medical treatment, maintain the mortgage, and keep up the bills and daily living expenses? When you've got so many things to spend money on, personal insurance might seem like an unnecessary luxury. It's really easy to put it off until a time when you think you might need it. The problem is, none of us ever know when that's going to be. The surprising thing about this is that insuring yourself isn't as expensive as you might think. For example, a 35-year-old man can provide himself with $750,000 if he dies, $750,000 if he becomes totally and permanently disabled, $250,000 if he suffers a major medical trauma, and $5,000 per month in income protection benefits, all for around about $180 a month, a large portion of that which is tax deductible to him. The same cover can be provided for a 35-year-old woman at a cost of around $220 a month, and again a large portion of that would be tax deductible to her. So when putting together your financial plan, please consider the consequences should something go wrong. Tracy Ferguson, thanks for listening.